Hello everyone, welcome to the IchimokuCharts.com daily analysis for the Aussie dollar, US dollar FX futures for Monday, June the 13th, 2011. Well, we're looking at the green-bodied candle here. The small red-bodied candle at the end of the chart is the current next 24-hour period of trading, so we'll analyse the second last candle here appearing on the chart. We have a green-bodied candle and quite a change of sentiment in the market compared to this, all of the candles in the previous downswing. We have some very small-bodied candles and some large red-bodied candles. Today we have a larger green-bodied candle, so we have the buyers making net bullish progress on the day between the open and the close, so that could be significant for a potential change of trend to the upside. We haven't had a change of trend to the upside here yet, and certainly the market failed to just take out the low of the previous candle. So that does raise some doubt about continuation of the trend. So we have borderline inside day and bar chart terms as well. Now in candlestick terms, this is also two types of potential reversal patterns. We have previous downtrend here in place in the first time frame, with the market trending down from around 107.5. And we have a tweezer's bottom, and that's where candles that are adjacent have their lows within the same area. They don't have to be at exactly the same area, but within the same region, and that's at around 104. So that's a potential tweezer's bottom bullish reversal pattern, and it's also a potential harami reversal pattern where we have the downtrend, a large red body, and the body of the current candle is within the body of the previous candle, so very strong potential for a change of trend to the upside. The green body, as I've said, denotes the buyers making net bullish progress, but the buyers have also managed to close the market up towards the high of the current candle, and that represents the buyers closing the market with control. They did, however, lose some commitment as the market tested up to around 105, so that's an important area for this market if we are going to see the market change trend to the upside. And we can see that there was downside price rejection as the market tested above 105 for the previous 3 days, so that could be significant. Now this support down around 104 is quite strong, and we can see from this the last 2 days trading that the market failed to penetrate down below there. We did see some indecisive trading down below there and strong upside price rejection as the market tested down to around 103.70. So a very strong zone of support for this market. Now in Ichimoku charts terms, we are trading within the cloud, so we have a neutral bias to this market. We also have the market trading below the Kijun Sen and Tenkan Sen, so the market is bearish in the medium term and fast term timeframes. The Kijun Sen has turned flat, and quite often when it's flat we get price action attracted back towards there. So we haven't seen that yet, but there is a strong possibility that price action will be attracted back towards that region. So that's even more makes it more important for us to watch the high of the current candle for a potential higher high and higher low. Now just onto the hourly charts, and we can see that we currently have the market trending down. Disregard that last candle, it's currently trading and hasn't completed yet, but the previous candle to that was a very large red body candle, and that denotes the sellers coming back into this market. Previously we can see these two large green body candles, so a lot of bullishness coming into the market as we broke out above the resistance at 104.39, which extended up to 104.50, and a very bullish two candles, large green bodies, and we actually broke out above the cloud with this large bullish candle. That was a buy signal in Ichimoku charts terms, but it's failed, so it goes to show that breakouts and the Ichimoku trading rules don't work all the time, but there's a reason why it did fail, and this is why we shouldn't just take the Ichimoku rules as in a vacuum. We should look to other factors that might affect trades that we take with Ichimoku, and that's the resistance overhead here. And we have very strong resistance around 105, 105.20, extending up to about 105.30. Where you can see a lot of this price rejection as the market was testing up around that area. Now that coincided with trading within the cloud, but also 105.20 is a very big important area. We can see here right to the high there, 105.08, and that's where the market roughly traded to, and we can see now we have downside price rejection We had a red body candle, some indecisive trading as the market attempted to rally, and then in this hour of trading that we're analysing, a very large red body. So the bears have come back with a vengeance to counter this very large upside momentum move that we saw with these two candles. Now, as we had this red body candle taking out the cloud to the downside, we also took out the Kijun-sen and Tenkan-sen. So in one swoop, the market became bearish in the medium term, fast term, and the long term time frames. Now, whether this market continues to the downside remains to be seen. We have very good potential for support down around these areas. Previous resistance area here around 1044, and that could turn into support for this market, but certainly very strong support down around 104. So if the market does trade down to that area, you'd expect that to hold. If we look at all of this indecisive trading down around this region and all of the shadows on the bottom of these candles, a lot of buying coming in down around this region, and just here we can see that the market tested down roughly to that area, and we had a very strong bounce off that region. So at the moment, however, we are bearish in all time frames on the hourly charts, but not a lot of potential for downside here. If we do break out to the upside once again, we would need to see the market trade up above this 105.20 region of very strong resistance. So we have a market that's really bound by a strong area of resistance overhead, but strong support down below. Now just quickly to the 5-minute charts, and we can see that we have a very strong downtrend in place, some very large red body candles as we broke out down below the cloud. Trading down below the cloud and the Tenkan-sen and Kijun-sen means that we're bearish in all three time frames. The Chikou span here is below the corresponding price action, confirming this bearishness in the market. Now there is potential for the market to find support down around this region. We can see here previously a very strong swing high, and we're now just trading down through there, so that area may have gone, very bearish trading down below there. So we could see the market testing lower levels. Some strong areas of potential support. Previous resistance areas around 104.36 down to this region where we had downside price rejection around 104.34. An area of potential support around 104.21, and then certainly down to the 104.04 area. But quite a bearish market at the moment, looking a little bit overextended. Wouldn't surprise to see the Kijun-sen turn flat, and as we've seen just now, in this next 5 minutes, there is potential for that. But the candle is only just forming. It might not stay like that. But if we do, we should look to potential resistance at the Tenkan-sen and Kijun-sen, which are trading at 104.52 and 104.61.